In a world chasing complexity, one man chose clarity. Warren Buffett's timeless principles reveal that investing isn't about luck. It's about logic, integrity, and a long view. Step inside the mind of a master. Introduction. Wisdom from the Oracle of Omaha. Warren Buffett isn't just a billionaire investor. He's a teacher, philosopher, and steward of ethical capitalism. The Essays of Warren Buffett is a curated collection of his shareholder letters, organized thematically to reveal the principles that have guided Berkshire Hathaway's extraordinary success. Buffett's writing is clear, witty, and deeply rational. He doesn't rely on jargon or hype. He relies on common sense, integrity, and long-term thinking. This book is more than financial advice. It's a blueprint for living and leading with purpose. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Part 1. The Philosophy of Value Investing. Intrinsic value over market price. Buffett teaches that stocks are not lottery tickets. They represent ownership in real businesses. The goal is to buy companies whose intrinsic value exceeds their market price. Intrinsic value equals future cash flows discounted to present value. Market price equals what others are willing to pay. The gap between the two equals opportunity. Buffett avoids speculation and focuses on business fundamentals. He doesn't chase trends. He seeks durable competitive advantages. Price is what you pay. Value is what you get. Circle of competence. Buffett urges investors to stick to what they understand. He calls this the circle of competence, the industries and businesses you truly grasp. Know your limits. Avoid complexity. Invest only in what you can explain simply. This principle protects investors from emotional decisions and blind risk. Risk comes from not knowing what you're doing. Mr. Market, your emotional partner. Buffett introduces the metaphor of Mr. Market, a manic depressive business partner who offers to buy or sell shares daily. When Mr. Market is euphoric, prices soar. When he's fearful, prices crash. Your job: stay rational, not reactive. Buffett uses market fluctuations as opportunities, not threats. Be fearful when others are greedy, and greedy when others are fearful. Part 2. Business Principles and Corporate Governance. Owner's Mentality. Buffett treats shareholders as partners, not passive investors. He believes in transparent communication, long-term stewardship, ethical decision-making. He avoids short-term earnings manipulation and focuses on owner earnings, the true cash flow available to shareholders. We enjoy communicating directly with our owners. Management matters. Buffett invests in companies with honest, capable, and passionate managers. He values integrity over charisma, rational capital allocation, a love for the business. He avoids companies run by egotistical CEOs or those chasing quarterly targets. We look for 3 things in a person: intelligence, energy, and integrity. If they don't have the last one, don't even bother with the first 2. Decentralization and trust. At Berkshire Hathaway, Buffett gives managers autonomy. He believes that people closest to the business make the best decisions. Trust fosters innovation and accountability. Bureaucracy kills agility. This decentralized model has helped Berkshire grow across diverse industries. We delegate almost to the point of abdication. Part 3. Accounting, Earnings, and Financial Discipline. Owner Earnings versus GAAP. Buffett critiques traditional accounting metrics. He prefers owner earnings, the cash flow available to shareholders after necessary reinvestment. GAAP earnings can be misleading. Look beyond the numbers. Focus on economic reality, not accounting fiction. Accounting is the beginning of financial understanding, not the end. Share buybacks and capital allocation. Buffett supports share repurchases, but only when shares are undervalued. He believes buybacks should increase shareholder value. Capital should be deployed rationally. Dividends are less important than reinvestment. He warns against buybacks done to boost executive compensation or manipulate EPS. The key to successful investing is to assess the intrinsic value of a business and pay a price that makes sense. Part 4. Market Behavior and Economic Forecasts. Ignore macroeconomic predictions. Buffett doesn't rely on forecasts. He believes no one can predict interest rates, recessions, or inflation. Focus on business fundamentals. Long-term value trumps short-term noise. He avoids market timing and urges investors to stay the course. We will continue to ignore political and economic forecasts, which are an expensive distraction. Behavioral biases. Buffett warns against emotional investing. Common traps include overconfidence, herd mentality, short-termism, fear and greed. He teaches that discipline and patience are the antidotes. The most important quality for an investor is temperament, not intellect. Part 5. Ethics, Simplicity, and Legacy. Simplicity over complexity. Buffett avoids complex financial instruments and convoluted strategies. He believes Simple businesses are easier to understand and value. Complexity hides risk. Transparency builds trust. If you can't explain it simply, you don't understand it well enough. Reputation and integrity. Buffett places reputation above profit. He teaches, do the right thing, even when no one is watching. Protect your name. It takes years to build and seconds to lose. Ethical leadership creates enduring success. Lose money for the firm and I will be understanding. Lose a shred of reputation for the firm and I will be ruthless. Long-term legacy. Buffett's goal isn't just wealth, it's impact. He believes in building businesses that last, educating future generations, giving back through philanthropy. His essays reflect a deep commitment to stewardship, humility, and wisdom. Someone is sitting in the shade today because someone planted a tree a long time ago. Memorable quotes. Our favorite holding period is forever. The stock market is designed to transfer money from the active to the patient. Chains of habit are too light to be felt until they are too heavy to be broken. In the business world, the rearview mirror is always clearer than the windshield. You only find out who's swimming naked when the tide goes out. Final takeaway, invest with heart and mind. The Essays of Warren Buffett is more than a financial guide. It's a manifesto for rational living and ethical leadership. Buffett teaches that success is built on clarity, consistency, and character. Investing is about owning great businesses, not chasing trends. Leadership is about trust, transparency, and long-term thinking. Whether you're an investor, entrepreneur, or lifelong learner, this book reminds you that wisdom is timeless and integrity is priceless. So read slowly, reflect deeply, and let Buffett's words guide you toward a life of purpose, prosperity, and principle. Thanks for watching Audio Mentor, where every book brings you closer to a better you. If you found value in today's summary, don't forget to like, subscribe, and turn on the bell icon so you never miss a chance to grow.